Joining us some more now is Scott Phillips from the Motley Fool. Scott, great to catch up with you on this Friday as we count down to Christmas, of course, and that market buoyancy remains, doesn't it? I mean, we see it in equities, we're seeing it in crypto. What's not to like at the moment?
Exactly. There is a lot going on. Don't talk about the hawk meme coin. That one didn't do quite so well, but Bitcoin are doing spectacularly well, mate. Dipped under 100 grand overnight early this morning, but it's been a remarkable rise, up 45% this year, almost doubled from the lows of early September. Now, of course, we know why. It's all about the Donald Trump presidency, the potential for a Bitcoin strategic reserve, plenty of fundies getting on board as well. I've said it many times, mate. I'm always happiest being the optimist in a room of pessimists. When everything's kind of at an all-time high, I kind of start to get a bit nervous. Not because I'm expecting anything or forecasting anything. I just kind of, when everyone else isn't happy and I can see the opportunity, I'm like, okay, that's my sort of market. When everything's riding high, you've really got to look around and make sure you're not just getting caught up in the hype. There's some expensive stocks out there at the moment. Pro Medicus is one, by the way, 260 odd bucks, whatever it was. There's a lot of optimism across markets broadly, as you say, crypto, stocks, really across the board. Again, I don't want to be really careful. I'm not predicting a single thing other than I'm just more cautious when the market's at all-time highs than when it's not, because it's just simply more opportunity to be had. The crypto space is fascinating, mate. The move by the Australian regulator, ASIC, to regulate kind of crypto adjacent things that crypto is linked to, that's kind of making them regulatable, or that's a word now. Basically, if you link it to a currency, you link it to a bond, you do something else with it, then that's an opportunity for the regulator to say, hey, this is the gateway into that stuff, and that stuff's regulated, so therefore the crypto offering is also regulated, without actually saying we'll regulate crypto coins or Bitcoin specifically as an asset in and of itself. So that kind of is the ongoing conversation. The challenge about currency versus asset remains. We will probably get dragged into whatever the US is doing just by sheer force of gravitational pull. And January 20 is coming very, very soon. The SEC chair going to step down on that date, and a new one appointed. So there's a lot going on in the space more broadly. I guess a general reminder from me that when everyone's excited, it is a time just to step back, not to sell, not to be contrarian for the sake of it, just to kind of go, hey, everyone else is getting a bit carried away here. Am I definitely getting good value? Am I buying the right things? Do I have the right mindset? Or am I just jumping on the train? Because that's, unfortunately, can end in tears in a lot of assets.
So, I mean, you talk about perhaps the party being at its height. I mean, is it time to think about leaving then?
Look, I mean, I wouldn't, mate, because here's the problem, right? If you look back at any time in history, you can easily pick the high points and say that was the time to jump off. The problem is that 3, 6, 9 months before most of those eventual peaks, there was still a lot of money to be made. And normally when we drop off from the peak, you only go back 3, 6, 9, 12 months, whatever it is. So if you're early trying to jump off, you may end up missing more upside, ironically. Even if you go up and then come down a little bit, you may still be better off having had that ride rather than trying to pick the peak. So yeah, I don't time the market, mate. I don't try and get off at the right times. When I'm buying, I'm being very careful what I'm putting my cash into. And we recommended a couple of sells at the Motley for the last couple of weeks, largely on that basis of this feels just a bit too expensive. Not as an overall market, just as a, hey, the company can't justify this sort of PE, that's crazy. So that's kind of the approach we've taken broadly, and we'll continue to do so. And I guess, we're still looking for opportunities to put money into, and we are finding them. I don't do rotations. I don't try and time the market and that sort of stuff. But if there's something that's simply overvalued, you sell it. If something undervalued, you buy it. If you kind of keep your wits about you, you just got to be really careful. It's not so much the price per se, it's the mentality you get dragged into, right? As Buffett would say, you pay a high price in the stock market for a cheery consensus. When everybody's positive, when everybody's excited about something, that's the time just to be a little bit careful. Wonder what the rest of the crowd is missing. You want that kind of different opinion to kind of make the market, make the case. When no one's negative, when everyone's positive, just be really, really careful.
Do you feel as though the underlying fundamentals are looking strong at the moment, and particularly look at a macro level? Locally we've got GDP, that's showing some signs of weakness. I guess the focus on the states, though, is jobs. In fact, we're going to get that key report tonight, the non-farm payrolls.
Yeah, it's huge. Look, I think when you look at the market, so are the fundamentals strong? Yeah, actually they are. I mean, there are really profitable companies doing pretty well. Not all and not everywhere, but pretty well. The challenge is the expansion of the PEs. I think I saw something this morning saying the PE of the S&P 500 has expanded 17% this year. In other words, not just earnings, but expectations. Now, there are some great businesses in America. There's some great businesses here. They will continue to grow, and you shouldn't be scared of that, right? Pick any Apple, Facebook, NVIDIA, Amazon I own shares in. They've gone through periods of highs and lows, but holding for the long term, if you have quality, is a great strategy. So you want to be a little bit careful about that. The macro situation, though, as you say, it's a challenging one right now. The Australian economy, ironically, is in pretty decent shape given where we are in the cycle. That is, in other circumstances, at this point, we might have had 5, 6, 7% unemployment, and unemployment remains the linchpin economically. We will struggle through with mortgages, we'll struggle through with interest rates, we'll struggle through with rent for the most part, not everybody, but the economy as a whole, if unemployment stays low. If it rises, that's when all bets are off, because that's when we have mortgage foreclosures, people selling in a hurry to try and basically get some money out or avoid having to pay a mortgage they can't afford because they don't have jobs. So while ever the unemployment number remains low, I think we can kind of muddle through. And separating out, there's three parts here. There's individual consumers, there's the economy as a whole, and there's the government balance sheet and P&L. And those three are in really, really different places. The government's never had more revenues, taxes through the roof, corporate taxes, personal taxes. That's going really, really well. The economy's kind of muddling along, growing a little bit. But by the way, 7 quarters of per capita GDP recession, which when you get back to the individual level and say, what's the individual suffering with? Like I say, as an investor, because populations have been growing so quickly, we've actually been able to paper over a lot of that stuff. Markets are growing, literally the market for our goods and services is growing because there's more people in the country. So I know it's a great social policy to have population growing so quickly, but economically it's protected the government from the kind of budget deficits we otherwise might have had, and protected investors in a large part too, because even as individuals are pulling back, the sheer number of us grows and makes up for that.
So, Scott, you talked about obviously how well tech has done in the States, and that has driven the broader market there. What are you seeing locally with tech and the performance there?
And that's why this sort of stuff is really hard to do, Andrew, because we're seeing the so-called Magnificent Seven growing really strongly. And so you look at PEs and you kind of can't compare the price earnings multiple of a steel mill with an Nvidia or an Amazon or one of those fast growing tech companies, because they simply have much more growth ahead of them. I think it's, you can argue about the specific valuations, but the idea that the future growth is probably faster than what we've had in the past from industrial companies, I think it's probably pretty likely, right? So it does mean the PEs should be front loaded a little bit because of that growth. Here at home, similar kind of things. We're getting whipsawed by US tech. You see it overnight, right? There's the whole market in the US and the NASDAQ. Here in Australia, we see the same thing. There's the whole market and there's tech. Of course, we've got energy and banks that move differently as well. Tech's been, of course, WiseTech, the poster child in some ways for tech for a long, long time, having its own struggle. So that's kind of, blanketed there. But again, look at Pro Medicus. Numbers they did, they announced a $330 million 10-year contract, revenue-wise, right? $30 million a year, give or take. The company added $2 billion of market cap on that day. Now, you'd have to do the maths particularly strongly to go, hey, that feels a bit much, right? $30 million a year, $2 billion of market cap. There's a lot of optimism, a lot of hope. And I think there's a combination in tech, mate. There's a little bit that's left behind. We had the big crash in tech in 2022. That was a great time to go shopping for tech. You just want to be a little bit careful now about the expectations. It goes back to my broader market sentiment, but just think about where everybody is feeling really great. The classifieds business is another one. REA, really expensive at the moment. Can it justify its earnings? Maybe, or its price, sorry, with its earnings? Maybe. But it's really, some of those prices are looking like they're priced for absolute perfection, or in Promedica's case, even more than perfection, I think. But think about that in the context of prices. Now, go shopping, go and look for the bargains. Take the Black Friday approach or the Cyber Monday approach. There are some out there. Not as many as there were because the market's rising, but there are still bargains to be had. There is still good value around.